Welcome to Markets Now. I'm Michelle Rook along with Chip Nellinger, Blue Reef Agri Marketing, and a mixed close in both grain and livestock futures trade here today. And grains, let's talk about that first. We had the AgDay report out today, Chip, and first of all, we saw an increase in corn yield and production, but ending stocks were only up about 10 million bushels. Did you feel like that was actually a little bit of a victory considering how poor exports have been recently?
Yeah, it was a little bit of a moral victory. I think part of that goes back to a month ago where the USDA already took a fair amount out of the export number. So for where we're at this point in the game, I think the USDA kind of felt, let's take a pause before we cut further out of the demand. Also countering that is still pretty strong domestic demand. You know, our ethanol pace has been pretty good, and the feed side of the equation really, with the poor crop in the Western Corn Belt, that's the function of this market now, is to get the corn out of the Eastern Belt where yields were good into the Western Corn Belt and the feedlots out there. And so domestic demand is still very strong.
Now, I mentioned yield being up about almost a half a bushel per acre, which kind of bucks this trend of small crops getting smaller. So will we see an increase maybe going into the January report, especially since, man, Illinois had a record production number?
Yeah, big bump up in Illinois crops, and probably warranted from the producers I talked to. Although there's still a fair amount of corn left in the field here in the northern third of Illinois. So I think that's going to be the question. I don't see them going up a whole lot more. Sometimes in hindsight, when the USDA raises it just a tick like they have, it tells you that, hey, they've got it pretty well zeroed in. But I think there's going to be that debate all the way into the January crop report. Do they have higher to go? Are they close with this small bump higher? I think that question is going to still be there for the January report, leading to the potential for some surprises still on yield.
So corn's testing the bottom side of the trading range. Are we going to hold?
Well, I think so. I think wheat's been part of that. I think that there was some nervousness about even a bigger yield than what we saw today from the USDA. This grain export corridor out of the Black Sea, I think, is weighing on that. But I get a sense here that we got towards that 660 and just a tick under it. You increase commercial buying. I think there's end users out here still have an appetite and still buying this break. Is 660 going to hold it? It might not, but I think that within the next dime or so, we're going to uncover good support. Again, the seasonals are at our backs here, and so into the end of the year, I think we've got a chance, once the crop gets tucked away in farmer storage, to see a little bit of a rally to get it shook back out of farmers' hands.
So let's deal with soybeans. We had about a 0.4 bushel per acre increase in yield, and production was up. Ending stocks were up a little bit more than we expected. 220 million bushels, though, is still pretty tight, isn't it?
Still pretty tight. Gave us a little more breathing room. They did up the crush by 10 million bushels. Plenty of evidence that domestic demand is still very strong. Crush margins positive, but there's not much margin for error there. The big thing that's ahead of us here is the South American crop, and Brazil's got a pretty good start as far as planting goes. It's been very dry in Argentina. There are some chances for some better conditions to come for Argentina, but we got a long growing season ahead in the Southern Hemisphere, and that's still going to be, the main driving force here as you get deeper into winter.
Absolutely, and the world estimate on ending stocks for soybeans today kind of reflected that, didn't it?
It did. It went up. It was towards the high side, a tick over 102 million metric tons. Again, there were some private estimates out this week from CONAB, which is kind of the Brazilian equivalent of the USDA, 153 million metric ton crop and change. That's a big crop. There's some talk that it could even get as high as 156 given the right weather conditions. If that happens, that's a big if, but if that happens, that's going to swell that world ending stocks number even further and kind of cap any rally potential into spring.
Absolutely. So we did get some export business this morning. We saw some yesterday, but the market kind of fading it almost. What do you think of this market as far as soybeans? We went up, we did kind of hit some resistance areas. Are we just going to kind of consolidate under that level now or what?
Well, I was kind of impressed with the way we closed, quite honestly. Big sales the last 2 days, over 400,000 tons both days. And so I thought the market, in the case of beans, had every reason to break. Crude oil had a big break. Soy oil tried to break and then came back. So, I like the way where we're at technically. I think if you can see a little bit of fun buying here going into the end of the month, and by the way, which is seasonally a good time of year, once you get towards that Thanksgiving and Christmas holiday, you usually see a little bit of a rally in beans. I like where we're at. I think you could rally some, maybe challenge closer to 15 bucks. I don't know if you get north of 15 without a weather problem or a weather scare in the southern hemisphere.
Yeah. And you had mentioned the big pullback in crude oil. I was surprised soybean oil was able to divorce itself from that today. That was a pretty big break. So.
Yeah, it really was. And you had, I believe, Malaysian palm oil was down pretty sharply overnight as well. So for soy oil to buck that trend, there's still some buying interest there in there. Maybe it's funds, maybe it's not so much the commercials now, but we're in an uptrend and everything. If the funds are in and like the bean market again, speculatively, both oil and the physical beans, we could still have some upside into the end of the year.
Not much in the WASD for the wheat, bulls, or the bears, frankly. So we were back to kind of trading this export news. It sounds like President Zelensky says, hey, we may want to try to negotiate something out, huh?
Yeah, I mean, it's back and forth on this Black Sea export corridor. My take is that the market is kind of starting to think that they're going to renew it for another 12 months. And whether that's the case or not, we've got a week to go, so we're going to have probably 19 news stories each way between now and then. But right now, the wheat market, to me, seems like it expects that we're going to renew that thing. Now, the crazy thing is, the export corridor has produced more corn exports than wheat exports in the big scheme of things. So the wheat market seems to take the news harder. Corn, I think, has been drugged a little bit lower because of it, but there's actually been more corn exports out of the Black Sea than wheat over the last couple of months.
Yeah, you and I have talked about that before. Technically, we had some selling, though, too. We ran right up into some chart resistance this week on, I think, both Kansas City and Chicago wheat, didn't we?
Yeah, you really did. So there's still, a great technical trade going on here. Very volatile and choppy. I look back 3 weeks ago, we were $1.50, almost $1.50 higher than where we were right now. So, this thing continues to swing in wide ranges. But speaking of technicals, not a really strong technical picture as you close into new lows. If we can't bounce right back by Friday, that's probably going to uncover, some technical selling from a weekly perspective as we get into next week.
Okay. How quickly we have to watch support areas after running into resistance. Last question on the cattle. We're holding support there. I know the lack of cash news has probably been a little problematic here for the market, but do you think we're going to hold?
I don't know. I think part of this is the perceptions that the world economy is slowing, and I think it remains to be seen. The boxes seem to have held together pretty well. Again, I think the cash market can hold it together, but I think that we could stay in a pretty choppy range here. I'm not confident that the recent lows will hold, but I'm not so sure we're just done to the upside either. I think it's going to stay very choppy in the cattle market.
Okay, appreciate your analysis. Chip Nellinger, Blue Reef Agri-Marketing with Markets Now.